Which loan from a bank is going to help you fund your next assisted living facility as well as keep you afloat, possibly for the next 6 months? Let's find out. Hi, this is Carl Cuesta with Assisted Living Rookie, here with my new guest today. Can you introduce yourself?
Yeah, go ahead. Hi, I'm Hunter Ruiz. I'm an SBA lender for Dogwood State Bank, and I help small business owners, get financing nationwide.
Now, in Assisted Living Rookie, our focus is assisted living facilities, um, acquiring it and funding it. So this is a really important guest that we have today. Uh, how do you fit into the assisted living facility puzzle? Can you tell us more about how you can help us?
Yeah, I mean, so any existing assisted living facilities, even our bank does startups as well.
Mm.
If you need financing, if you need things of debt refinances, purchase of equipment, inventory, working capital needs. Let's say you want to do a ground up construction project, or you want to buy one. We can finance all those things. So as of recent, Charles, what you know
Mhm.
I've been, lucky enough to come across a bunch of assisted living facilities recently, and from the deals that I've received, they've been good cash flowing deals, and it's a good industry.
Yeah, really excellent deals. Um, One of the things that I love about the SBA program, which is all new to me, I'm all new to SBA,
Yeah,
is the fact that we can put a lower percentage down, and we can actually get working capital back. Can you tell us more about that specifically? You
yeah,
can use our deal as an example if you
yeah.
like.
So the one that we have, I think you're getting 150K working capital.
Hmm.
You can use it for things like accounts receivables, payroll, just your daily expense, or well, not daily expenses, but operational expenses. If you have a lease set up and you don't have the rights to the property or you don't own the property, you can pay 3 months of rent with it.
Oh,
There's ways to use working capital, marketing, advertising, things of that nature. And I guess from an equity injection standpoint, most banks, that come across deals are asking for 20, sometimes 30% down.
exactly.
With, with at least our bank, we only require 5% down from the buyer, and then the other five can come from the seller. But if the seller doesn't want to, provide the seller's note of 5% down, then you, the buyer, can put the full 10% down. So it's 90% financing for business acquisition loans.
Wow.
Yeah.
So this is not just SBA for business loans in general. We can
Mm.
put 5%, and the seller can put 5.
Yeah, if you're an existing business, depending on what type of use of proceeds you're using, like if
Mm-hmm.
you're refinancing any debt and
Mm-hmm.
you've been in business for over 2 years or so,
Mm-hmm.
typically, it's 100% financing. Equipment, same thing. Working capital, same thing. It all kind of just depends on how long you've been in
Wow.
business, and then also it kind of depends on what the use of proceed is of why you're requesting the financing.
Now, a couple of our viewers are wanting to start an assisted living facility from scratch.
From scratch? Okay.
Um, would this product be something that they could use?
Yeah, depending on, like I said, what they need it for.
Mm-hmm.
If it's a startup and they want, let's just say, equipment, right, or working
Mm-hmm.
capital, we can, they can put down 10 to 15% for a startup. Startups are going to require more down because it's a
Yeah,
startup,
more risk, I
more
get it.
risks.
Yeah.
If you're going to do a startup, let's say ground up construction project, you're
Mm-hmm.
looking at 20 to 30% down.
Okay. Okay. What about like something like a conversion, like they purchase the real estate and they want to create an assisted living facility out of that? I know one of the things we need is like a sprinkler system. Would that be
Mhm.
something that they can use? Would they still need like a, a higher percentage down or?
So, like you're saying, they pretty much purchased the real estate and then
Yes,
they want to basically, start their
exactly.
business. Yeah, I mean, technically, it's still considered a startup because there's no
Hmm.
business history.
Gotcha.
There's no, financial data, stuff like that,
Mm,
because they haven't been up and running yet. For something like that, it would still probably be 20 to 30% down.
20 or 30%. Okay.
Yeah.
Hopefully more on the 20 side. All
Yeah.
right, that's awesome. That's awesome. Now, in terms of like this is how you fit into the puzzle. You're
Mhm.
helping us assisted living facility future operators and
Yeah.
current operators get funded. What is the process usually like? Like, let's say I were to, in terms of length, like
Hmm.
I were to apply today.
Hmm.
If I turn in all the documents that I need in time, like within a day or two? How does that process look like?
Yeah, I mean, so initially we send out our initial needs list, and we go from there. Once I receive all the documentation, like you mentioned,
Mm-hmm.
it can take anywhere from about 30 to 45 days to fully fund
Mm-hmm.
close, assuming there's no construction involved.
Mm-hmm.
Um, it kind of just depends. I like to tell everyone because it's true. I can only move as fast as you want to move.
Exactly.
So it's up to you and how quickly you want to move on your project. I would say, after we go through the pre-approval process, we submit it to underwriting, and then after underwriting, you get your commitment letter, and then there you're all, you're on to closing, and that's when it gets down to a lot of documentation.
Uh-huh.
But if you're motivated and you're willing to get it done, you can get it done pretty quick.
30 to 45. That's pretty quick.
Yeah.
I like that. I thought it'd be a little bit longer than usual,
It just,
honestly.
yeah, like I said, it just depends on how fast you're moving.
Awesome. Awesome. Now, it's a different. I always like to ask people what is a challenge and what is how did you have a solution for it. But what is a challenge that you often face on the lending side, and how have you solved it, or how can we help it make it easier for you to help us?
Yeah, I think that's a good one. I think that's a good question. I think just kind of being transparent
Mm-hmm.
with everyone, involved in the process and kind of where we're at
Mm-hmm.
and what we need. Um, I think there's people that drag, on their deals
Mm-hmm.
that take forever, and then you're having to re-update information. You have to get updated stuff. I think just kind of working around that is just constantly, calling them, making sure
Mm-hmm.
they're providing everything they can up front. And then outside of that, really, I mean, I would say in closing specifically, it's important to have a good attorney, because if you don't have a
Mm-hmm.
good attorney representing you that doesn't have any SBA experience and
Mm-hmm.
trying to get a deal done, it can prolong the process a lot. So it's important that you get an attorney at closing that's going to help you, get this loan done a lot faster.
Oh, that's excellent. That's definitely some good news. Now, in terms of you said like is there a time frame, like for example we turn in some documents, is there a
Yeah.
time frame that that document is good for? Because I always get the question like the last 2 months, and then after a
Yeah.
month they'll ask again, give me the last updated, is that
Yeah.
what it is?
So, I mean, I think it depends on what stage you're at. If you're still in
Mm-hmm.
the beginning process and you're still providing documentation a month out from when you provided that, let's say,
Yeah.
personal financial statement, those are only good for 90 days.
90 days, okay.
So, and then, if we haven't even got a pre approval, you're still talking another 30, 45 days out, right?
Mm-hmm.
So, I would probably get an updated personal financial statement prior to submitting it to underwriting.
Mm-hmm.
That way, later down in the process, when we get into closing, you don't have to re-amend that. That's one less thing you have to worry about. And then in terms of business financials, they're good for 120 days.
120 days, okay, that's good. Like the business that we're acquiring, right?
Correct. Yeah.
Okay,
So all their P&Ls, balance sheets are good for 120 days.
that's excellent. Now, in terms of like what am I was gonna ask you. That was a challenge, and that was so the solution you had for that challenge was just following up.
Following up a lot, just staying on top of them.
Mm-hmm.
I think in closing too, you get into closing where it's like, hey, I want to work with my attorney friend named Joe.
Mm-hmm.
He doesn't have any prior experience, but I trust him or her, whoever it is. And a lot of times you find out that that attorney is not really involved,
Mm-hmm.
and then me, the lender, is having to get pulled in closing, which is fine. I want to get
Uh-huh.
the deal done. So do you.
Yeah,
But it just makes it a lot worse, I would say, and it just becomes more difficult to get it done in a timely manner.
I gotcha. I gotcha.
So I have SBA attorneys now, which is good moving forward. I'm going to continue. Well, I haven't done many deals with this attorney,
Uh-huh.
but so far the deal or two that I've done with her, she's great. So
That's the one that was as it was at the presentation where we met.
correct, yeah. So
Yeah.
that's who I hope you're going to be using as
Yes.
well.
Yes. Yeah.
So the fact that they have prior experience and they kind of know the documentation, paperwork, all that stuff,
Yeah.
the ins and outs, it should be a much smoother process come closing time.
Yeah. Because the SBA loan process itself, it's it's not hard. I would say it's just a lot more than usual, and just like an extra little step that like the whole business plan is
Yeah.
it's a new step for me.
Yeah.
So.
That can take time. Typically, what I see is the business plan projections. That takes a little bit longer for some people,
Yeah.
especially if they don't have a CPA or they don't know how to do projections.
Uh,
So it's important to kind of get a head start on that when you can,
Hmm.
because those are, like I said, that takes a while in the
Yeah,
earlier stages.
I think that was the chunk of it. That's the chunk of time that took the most
Yeah,
time.
no,
Yeah.
it probably will. I would say if you're acquiring a business, they're going to require a business plan, and every
Hmm.
deal has projections. So
Hmm.
those things take time, which is understandable. But the quicker you get it done, the quicker I can get it into underwriting and move on that stuff.
Awesome. 30 to 45 days. I'm excited. I'm
Yeah,
excited.
and then I guess back to your point about the more documentation, I would
Hmm.
say it is more documentation than going the conventional route and getting a
Hmm.
loan. But there's more benefits. I feel like with SBA, with the lower equity injection, you get to
Exactly.
preserve your capital, stuff like that, and you
Hmm.
get working capital on top for your business
That's the
as you
game
transition.
changer.
Yeah,
Yeah.
exactly,
I was
because you
like,
can
well.
use it for business needs. So it's
Hmm.
important. You're gonna want some extra excess cash flow.
Hmm.
Moving forward.
That was our thing. Like, in assisted living, we have current residents, but like
Hmm.
our fear is that, what if, heaven forbid, like someone passes away or
Yeah.
something. Like, luckily, our facility can handle like half of them passing away, and we'll still be afloat. But
Yeah.
what about those smaller ones that only have like five or six? If they lose like two of them, they're
Yeah.
under the water. So having that working capital to work with to kind of cover you, to make sure that you stay in business for the
Hmm.
next few months, or
Yeah.
maybe the year if you have enough. That's really a game changer for us, and that was one of the things that we were like, okay, SBA is the way we have to go.
Yeah.
It's the most more risk less risky for us in terms of assisted living facilities. So definitely
Yeah.
wanted to point that out for our audience. SBA
For sure.
loans and getting working capital back at the beginning. It's so helpful to you to
Yeah,
reduce
it's
to mitigate
very
risk.
important, during the transition period, and
Hmm.
then, that transition period can, take a couple months to get acclimated to,
Yeah,
your new situation, and it's important to have that, for your business.
like half our staff could quit. That's
Yeah.
another thing. So
Yeah, you want to keep payroll, you know what I mean?
you want to keep payroll.
You want to keep everyone around,
Yeah.
especially if you got to get staff.
Yeah. So for us, one thing I recommend for our viewers as well is, if you want to keep the staff, give them a reason to stay. For us, we're giving them a little extra raise for the next few months, to make sure they actually stay and work with us, and don't just jump ship. So,
Yeah.
after 6 months, that should be enough time to see if they want to be with us or we want to be with them. And then, we'll see from there.
Yeah, I mean, it's an important tool. You can use it as leverage,
Yeah,
for
definitely.
those employees, and,
Mhm.
hopefully they'll stay around.
But definitely need that extra cash in the beginning. Like, all right, guys, you get a raise if you stay.
Yeah, if you stay, yeah, good incentive.
Yeah. Well, that's excellent. Like, we went to an assisted living facility,
Uh-huh.
and it's assisted living. It's not a recovery center, right?
Okay.
But everyone, like, they were drinking in like 10 in the morning.
The
The
employees or
the
the
the,
people that were
the
living
people
there?
that living there, and
Oh my God.
then the trash can was full of beer. Like, and
Yeah.
I was like, man, like, what is this? Like, why? Like, why are you letting these people drink so much? And he's like,
Yeah.
oh, if we don't let them drink, like, they'll cause a scene or they'll get violent. And I was like, well, that's not the person you want then. Like,
Yeah, exactly.
yeah, because
Yeah.
this is disruptive to everybody. So that's why I was like, oh yeah, like some facilities are like that. Like, they're truly for profit,
Yeah.
and yeah, they make money,
Yeah.
but like your house gets trashed, and then like, are you really helping these people, or are you just like feeding into their I don't want to say addiction, but like it's kind of
Yeah.
an addiction, honestly. Like, you're feeding into that, and like you're taking their money and they're feeding their addiction, and it's just an endless cycle. And you're not doing this person like justice in terms of health, like raising up their health. You're just taking away their finances and
Exactly. You're just
decreasing
collecting
their.
and collecting their cash.
Yeah, and that's not how we want to do business. And
Yeah.
I mean, I get it, money is money, but like, nah, that's not how we want to do it here.
Yeah. You want to do it the right
Yeah, for sure, man. So I was like, no, we're not gonna take this place.
way.
But they're for sale. That she was selling facility, and they were like, nope, no, we're good.
No, I'm not interested.
Yeah, we didn't even want to put our name on it and sell it to other people because we were like, man, this is bad. Like,
Yeah,
yeah,
exactly.
can't take this, man.
That makes sense.
Yeah, but like, can you tell me more about what other businesses you lend on? Because,
Hmm.
and the reason I ask is because a
Yeah.
lot of our clients are like in the medical field. Like,
Hmm.
they'll be dentists, or like I have an endocrinologist that's
Hmm.
kind of looking into it.
Yeah.
Um, what other businesses do you lend on for SBA? Just to kind of give us a more
Yeah.
like complete picture.
SBA, I mean, I've done freight forwarding, logistics,
Okay.
transportation companies. I've done convenience stores,
Mm.
IT company, healthcare. Banks love healthcare. So
Nice.
that's always a plus. We'll pretty much do any business industry. Outside of right now, we won't do ground up construction hotels.
Mm-hmm.
We'll do business acquisition hotels,
Mm-hmm.
or if they're trying to refinance their existing debt for hotel
Mm-hmm.
stuff like that. We'll do that as long as it's up, and running. Um, Outside of that, I mean, all industries outside of residential, investment property, and gambling related.
Gambling. I know some people are very like not so happy about the.
Oh, and sorry, cannabis.
Yeah, there you go.
Cannabis,
That's what it
yeah.
is. I know some people are kind of like
They
not.
won't. Yeah, I think the thing is with SBA. I know in some states, you can do it,
Yeah.
but I think it has to be federally, around the entire U.S. I think federal wise, I think the entire U.S. has to make it legal.
Okay. Okay.
So I think once that happens, I think SBA will give into that.
And then like again, these have to be. So you do startups as well as established businesses for these.
Correct.
Okay.
Yes.
Now I had this is a personal question.
Yeah.
I had a guy.
Mm-hmm.
He wanted to set up a durable medical equipment like company,
Mm-hmm.
but he said he needed a certain amount down payment for that. He said like 3 million. I don't know where he got that number from, but like, is a startup like that with that large amount be like be something that you guys consider like riskier? Like what could make him be more favorable in your eyes? Like what could he provide for you?
So I guess back to your original point of question.
Mhm.
So someone was requesting him to put $3 million down.
Yeah, for the to start up a durable DME company.
Well, I mean, off the bat, I mean, it sounds like he has the liquidity to put that money in, so that's a good thing.
Mhm.
Our max loan amount for the 7A program is
Mhm.
5 million.
5 million. That's important to know. Yeah.
Yeah, and then I would say with 504, we can get up into the 10, 12 range.
Okay.
But that's more of a fixed asset based
Mhm.
program. 7A, you can kind of do anything,
Okay.
like how we talked about in the beginning.
Mhm.
But for that, I mean, if he has $3 million cash, that's pretty good.
Okay.
That's really good actually. So I mean, with startups, like I mentioned earlier, it's going to come down a lot to personal liquidity, and the
Okay.
fact that he has it up front, that's a good thing for him.
Mhm.
I don't know how much outside of that it's going to cost to start up. What he's trying to do with his business in terms of
Mhm.
the startup costs and all that stuff. But um, yeah, I think he's on the right track. He has great liquidity.
It's awesome. It's awesome. Now, in terms of the different SBA programs,
Mm-hmm.
I don't know if I got into it, but
Yeah.
I think we're talking more about the 7A, but what other product is there for the SBA?
Yeah, I only do 7A and 504 loans. There's express lines of credits, which you
Mhm.
can attach those to a 7A loan. If you need like a monthly line of credit, we'll offer that.
Mhm.
It just kind of depends on the business needs. I think we kind of touched on it earlier. 7A, you can do, purchase of inventory, purchase of equipment. You can refinance lines of credits, equipment debt, all sorts of debt.
Mhm.
You can purchase commercial real estate, do ground up construction projects, business acquisition loans,
Mhm.
and then 504 loans. Those are more the bigger projects, I would say. Or, if the borrower wants a fixed rate option,
Mhm.
you can get a fixed rate with the 7A as well, but the fixed rate option for the 504 is lower than the 7A
Okay.
interest rate. But the 504 is only tailored to fixed asset. So it's like equipment or real estate only.
Gotcha. Gotcha. Now, like, are the rates, are the terms better in terms of like the rates for the 504 versus the 7A, like for since it's a
Yeah,
fixed asset or?
yeah. I mean, on a 504 loan, 50% of the deal is financed by the bank conventionally,
Mhm.
and then the other 40% of it's financed by the CDC, who's backed pretty much by the SBA.
Mhm.
And the CDC rates, I mean, I think right now, the last one that I saw, the deal that came across was like around 6.8.
Okay. Oh
So
wow.
it's a lot lower than, a 7A rate right now.
Now, like, what's an example of a business recently that used the 504 for you that you encountered?
Yeah, I encountered a gas station. Yeah, it was a gas station. I think it was around 4.5.
Okay.
And they pretty much wanted to do a ground up construction deal. The
Mhm.
guy's already been, in that industry. He's already has another business, and now he
Good.
wants to expand his current business, which is the gas station.
Mhm.
He wants to go to a bigger, basically facility or really, he wants a bigger piece of property.
Mhm.
Um, so we're trying to help him finance that, and he wants a fixed rate option,
That's
and he wants a
awesome.
lower fixed rate, than he would get with the 7A program.
That's excellent. That's really excellent. That's and then the max. I know 7A. The maximum is 5.
Mm-hmm.
What's the maximum for the 504 program?
Yeah, I think it kind of depends on your bank.
Mhm.
I would say ours would probably be anywhere from 10 to 12. I mean, depending on the size, I mean, depending on how good the deal is, we can maybe go up to 15,
Okay.
but it's normally around 10 to 12. I would say it's max.
Okay. Cool. That's excellent. Definitely almost double.
Yeah,
So if it's right.
yeah. A lot of those deals, though. I mean, honestly, I don't ever take a deal over 5 million,
Hmm.
or sorry, 504 route unless it's above 5 million,
Hmm.
or if the borrower wants, some type of fixed rate option.
That's excellent. That's excellent.
Yeah.
Well,
I guess maybe this is a question for you. I mean,
yeah.
like if I wanted to invest
Hmm.
into an assisted living facility,
Hmm.
how hands on do you really have to be involved on like the day to day operation? Is there a situation where you can be like an absentee owner and just hopefully you have a good
That,
management in place or?
so for you can be, and that's what a lot of people like to do.
Mhm.
Um, just using us an example for us. So there's three of us. One is we kind of split it into jobs. Like one is the growth, how are we going to expand? So that's one person.
Yeah.
One is like the systems and the staffing, and it fits because he has a home health agency
Oh, that makes
that he
sense.
can quickly like staff really quickly.
Yeah.
And for me, like I'm a nurse practitioner, so I can
Yeah.
kind of handle problems and I can triage really quickly. And I also like to be like in the operational side of it, like the day to day stuff. So that's one thing. But we do get busy. But if you want to be truly hands off, what you can do is you can acquire one and just put a manager in there,
Okay.
and a manager will handle everything that happens. There's policies and procedures that you buy when you acquire the business that
Hmm.
will handle like every situation. Basically, like what happens if this. Well, this
Yeah,
is what you do.
that makes sense.
So that is what we want to do eventually. Maybe after a few months, once we're like super stable,
Hmm.
I do want to transition like away from that hands-on day-to-day stuff
Hmm.
and have the manager just report to me like once a week, like, hey, this would happen this week. This is what I did. And, all right, good. Just or like this is our budget for this week. This is how I improved it. Like just you can truly be hands off with assisted living, and that's how these people are able to acquire like 600 like 600 units or 600 doors for assisted living. Like they're not actually running. They're just paying people in Texas. Like
Yeah.
you can pay someone like 30 to 50,000 salaried, and they'll take care of everything. So it's really I highly recommend it. We're all getting old,
Yeah.
you know,
Hmm.
and if you have the liquidity, and if you have even if you don't have the team in place, you can hire the team in place pretty easily.
Yeah, that makes
So
sense.
yeah, so
Yeah.
I highly recommend it, man. That's the thing. For me, a personal goal, and I always tell people like, my parents. I wanted to do this because of my parents.
Yeah.
So I wanted to be the one like, all right, this guy I know does really excellent work, or this agency does really excellent work. I want them staffing this place.
Yeah.
Or I want to hire like this person because this is their credentials. So
That makes a lot of sense.
yeah.
In terms of like the market in Houston, at
Mhm.
least. I'm assuming it's competitive.
In Houston. There is certain areas that you want to have an assisted living facility. Um, like you want to be with high income around near high income neighborhoods.
Okay.
Now, though, the assisted living facilities that we specialize in are residential assisted living facilities. So there won't be like a big sign like this in this facility.
Yeah.
It'll look like a large home to everybody else, but in the inside, it's like it's a facility.
Gotcha.
It'll have a homey atmosphere, but
So you want to kind of be in the outskirts, like the suburbs of.
you could be in the suburbs, or you could be in like the higher end. Like I'll give you an example.
Like
Um,
you talking like in terms of suburbs, like cities, like
like
Sugarland,
Sugarland.
Woodlands,
Yeah, Sugarland, Woodlands. You want to be in those areas.
even probably Katy.
Katy, yeah,
Yeah.
Katie's good. And if you want to be like in the city, like there's a pocket on there, like near the
Hmm.
medical center. You know, very high income individuals live there. You can have one there. I haven't.
Is that kind of near Pearland or no?
Pearland is good too. No,
Yeah.
more like the inner city, like
Okay.
near the Texas Medical Center.
Gotcha. Okay.
So you can definitely start one up there if there isn't already one there.
Yeah.
you know. Now, how can we best reach you?
Yeah, I mean, I would say through LinkedIn.
LinkedIn.
LinkedIn, my email. I guess you'll probably plug that.
Yeah, I'll plug your email and
Phone
all your
number.
social
Yeah,
media.
I mean, best ways to call. I mean, I'm
Okay.
always on my phone, so it can be even after hours. I
Okay.
kind of work around the clock. There's really no time.
Mm.
Just don't call me at midnight.
Well, I won't
Probably be
pretend.
asleep. But seriously, I mean, there's times where I'm even working on the weekends if I'm extra busy that week.
Uh-huh.
So I mean, just whenever, whenever is best for you.
Now the number that I have, I'll definitely put that in
Hmm.
as well. But what about like any social media so they can kind of see your work? Did you do any of
Yeah,
that?
I mean, I would say my social media, outside of really LinkedIn, I don't have something catered to, my
Gotcha,
business side, but,
gotcha, gotcha.
more personal life stuff.
Okay,
But LinkedIn, I'm pretty active on there.
okay.
So you can give me a follow there.
Let's do it. Hunter Ruiz, got you.
Thank you. Thanks for the plug.
Yeah, I'll definitely add you in there. And then we have a little bit of time. I wanted to ask you. It's not in the questions I wanted to ask, but
Yeah, go ahead.
do one of the things that we pride ourselves on is we want to cater to rookies,
Yeah.
um, and rookies we're always looking for resources. Any resources that you recommend to kind of make sure that we succeed in the SBA lending process?
Yeah, I mean, I think just, if you're doing a startup, you're going to have, it's going to be a lot based on projections.
Mm-hmm.
And it's going to come down to your prior experience and your personal liquidity.
Mm-hmm.
Typically, we want a credit score, sorry, of 680 or above.
Okay.
We can work in the 670 as long as, you haven't been late on any payments recently or,
Mm-hmm.
the history of your track record, in terms of credit.
Mm-hmm.
Um, those are some tips. I think the main thing is just, making sure when you do take over a business is making sure you're not defaulting on your SBA loan,
Yes.
making sure you're making payments on time, making sure, if you do come into a situation where you're struggling, let the bank know or the portfolio manager that's assigned to your deal, and
Mm-hmm.
maybe on the back end they can come up with a creative way to kind of solve or help fix that issue.
That's awesome. Dogwood Bank. That's
Hmm.
right. Well, thank you so much, Hunter, for your time. I appreciate you. Um, we'll definitely need to come in next time and bring you in for more topics regarding SBA lending because it's one of the things that we always push here. Um, in terms of financing, again, working capital and then less down payment, game changers in the assisted living facility space.